Welcome to the daily overview for the 27th October. I'm going to look at the IBB first and then the SPY. And I've got one other ETF I want to show you that we made a lot of money on today. So we've got a great gap that happened here. You see go back to the 24th and the close 66.19. Now the 27th, the open is 63.68. By the time we got out here on the 27th, this low was 62.11. We didn't cash out exactly at 62.11, and this trend may continue to go further down, or sideways or up. I don't know. I don't care. I've had 4 positions in. This was my 4th position that was entered last Friday, and now we are out of the market. And it was a great ride for only 3 or 4 days, over 5% gain with risk control the whole time. So that's just a sneak peek of how the system works in these markets. I want to show you the SPY and then the one other trade I'm excited about. It was just a phenomenal day today on the 27th. On the SPY, we had another sell that we added on almost at the very bottom here. This low is 83.69, very close to that area. We sold again, and we're gonna just continue to ride this trend. We were able to tighten up our trailing stop a little bit. This position here was our second position. A little bit further back, you can go back and look at the old overviews for the 23rd and 24th. This one here is the second position, so this is our third sell position. And sitting out these flat markets is normal because trends never move in a straight line. They always zigzag, and this is a flat period, and we only had one extra sell signal. So we're not making money necessarily until we cash out, but we've had a great day. IBB cashed us out, and this next ETF I'm going to show you on the 5-minute chart was phenomenal. 15-minute chart, excuse me. Looking at the DUG ETF, this one's oil and gas. It's basically highly correlated to the volatility in the oil market right now. That's what I like about my system, is that many times it does capture up moves and down moves and up moves in the same day on the day trading system. So we're looking at the 15-minute chart. The first sell signal was here at 11:15. Once again, I can't give you the exact numbers. That is where the sold happened. We added another sell here. We had a reversal type pattern signal, which means that we not only cashed out of these sell positions, this one for a good profit and this one for a small loss, overall profit on the sell side, but we are now long before this whole run up. And we actually were triggered another long position, and then we were cashed out right above where this chart goes off, about 15 minutes before the close. You can see here the low of this bar is 53.66 and the high is 57.66. Quite a bit of volatility that we captured, and not only did we make money on the sell side, but we made money on the buy side. Now, when we go down to these 15-minute charts, it's slightly different than we're trading the 60-minute charts or my standard system, which uses the daily charts and only takes 5 to 10 minutes per night. If you do choose to trade this way, you've definitely got to stay on top of it. You don't have to watch it the whole entire time. You can actually take a break every 15 minutes and come back and see the next bar and see what happens. When I trade it, I stay the whole time. I'm not gonna leave, but personally I prefer trading on the day charts, but these 15-minute charts do have some good action when there's volatility, and my course shows which days are higher probabilities for that. So what happened here is we made over 5%. That's the whole entire thing I'm trying to say, and the risk was still less than 3% on this set of these two trades and on this set of trades. So it's just a great day, and it doesn't happen every day, but when it does happen, it is nice. And my list of ETFs that I go through to trade that I look at, It's fairly small. Talk about that on my homepage. So that's why it's only 5 to 10 minutes per night to trade if you use my regular method on the daily charts. But guess what? It's pretty much the same list for trading the 60-minute chart or the 15-minute chart or even the 5-minute chart. So it's not a lot of charts that you have to look at. So it's based, the list of ETFs is based off of three things. Why I chose them: correlation, volatility, gaps, and volume. So first, let me go through them one at a time. First of all, is correlation. It's very important. For example, the SPY and the QQQQ are very similar to each other. The DUG, there's a couple of other ETFs that monitor oil, quite a few actually. I prefer the DUG. So why would I want to trade all the other ETFs that are monitoring oil when I could just trade this one? So the high correlation is not something that you always need or want. And then the volatility and the gaps is important because that's going to determine if it spikes on you a lot and if there's gaps between each day, and then the volume, and that's going to determine your fills. When you actually want to enter 100 shares, are you going to get the price that you want? So there's a lot of work, hundreds of hours goes into everything, but not just the system and the money management, but very importantly is which ETFs are the best to trade. And so I've narrowed that down for my course members. So that's the overview for today. We'll see you tomorrow.